G'day everyone, and welcome to today's Q&A with Whitey. Thanks very much for joining us. Hopefully this is all coming through okay. As you can see, I'm in a bit of a different setting today. I'm in the throes of moving house. I'm at the new house at the moment, and maybe a bit echoey, bit of a strange setting. And of course, normally I'm in a t-shirt, and I woke up this morning, suddenly realised I only left myself with one white business shirt to wear. There you are. That's life. We'll get through it all. But thanks so much for joining us. It's going to be a great conversation today. But before we get into that, make sure you've got your cup of coffee ready and also something to eat for morning tea. Whilst moving, I haven't got any cups or anything here. I can't. I've just got some nuts in a bag. Yay for morning tea. There you are. That's what happens when you're moving. So trust you all well. And let's move on into today's session. So firstly, as we progress, I'd like to thank those who are our sponsors and who are supporting us, the likes of AAMC, Affordable Staff, ALI, AmFin, Credit Fix Solutions, Early Pay, Finstro, Heartland, Insurance Advisornet, Notify, On Deck, OptiPay, Pepper Money, Prosper. Talking of Prosper, I don't even have a glass. I've got a Prosper drink bottle. And the good guys at Strive Financial and Trailbook Loans. So we thank them for their support. And now, let's get on with today's session a little bit. So we'd like to welcome the one and only Victoria Costa, the founder and CEO of Credit Fix Solutions. I knew Vic before she was Credit Fix Solutions. Oh yeah, that's another story. We'll worry about that then. Let's welcome Vic on board. Vic, come on in. How are you?
Very well. How are you? Morning,
Good,
morning.
Thanks. Morning. Thanks for joining us today. It's very good of you to spend some time out of what is a very, very busy schedule of yours to come and have a chat.
After yesterday's game, I'm still in the gold. I'm in the vibe. So excited to be here. So thanks for having me.
Well done. And they certainly did give one hell of a good whack last night. And the results are always what they are, but that's the way it is. Good of you to make sure you're wearing the gold shirt. Well done.
All about support.
Yeah. If I thought about it, I have a green FBAA shirt that I could have worn. It was sort of halfway.
Could have worn that today.
And we would have balanced out. Stupid me. Yeah, too busy trying to sort crap out. Don't you hate that? Okay. But Vic, thanks very much for joining us. And I'm really looking forward to today's conversation around the whole credit solutions, credit fixing conversations, and to how that plays out and how it best plays out versus what some people might perceive it is. But before we do that, before we go down that path, I'd like to get to know young Vic a bit better. And
young?
I'm very
mid-40s, Vic, maybe 10 years ago, but thanks.
We'll try this. So I'm really interested to understand, what you did when you came out of school, what your journey was from there, just in brief, to lead you to doing what you do today, but without going into doing what you do today, because I'll deal with that later. But just what was that journey like for you?
Very up and down, very stressful. I mean, I know they say that life's hard, but bloody hell, I didn't think it was going to be that much, to be honest. It's important we all feel that we can share, right? So I'm not going to sugarcoat anything. University in London for 3-4 years. Guy breaks my heart. I end up back in Australia, working in pubs. And then I fell into the mortgage processing world in 2002. Fast forward a few years, another dude breaks my heart, but this time I'm left with a kid to raise, and I end up back in Housing Commission, which is where I was born in the UK, funnily enough. So that was a bit ironic, but quite blessed at the same time to have that opportunity. As we know, trying to get housing anywhere right now is hard. And it also gave me the opportunity to start Credit Fix Solutions, because I mean, I was like broke, single mum. I hate that cliche, I hate using it. It's thrown around too much, but that was the journey, and then that's where Credit Fix started.
So it's interesting, and don't take that the wrong way, but a lot of people think that people get where they are and it's a very easy and straightforward kind of road. It's not. I know it hasn't been for me, and various things that's happened in my career, but we're not talking about that today. But people, I guess, understand, or it helps them to understand that success was going to say comes at a price, but I guess in your case that you were paying a price, but you found success along the way. I mean, to be able to achieve and set up a business, and I know you say it's a bit of a cliche, but being a broke single mum as such, to be able to get out there and do that, to me, shows to everyone around this country that if you really believe in something and you want to do it, you can get out and you can do it, and do it very, very successfully, because you've built a very, very successful business. So, all kudos and power to you for being a strong woman and being able to have the fortitude and focus to be able to push through some really hard times.
Oh, and I've got great support. You've always supported me, and Leah, and so many beautiful brokers. Hello to everyone out there today who are listening. But it also makes you who you are, right? So I find, you look back in those difficult parts you've been through, you're like, you know what? I am what I am today, and I have empathy and I have sympathy, and I'm strong because of all of that.
Yeah.
Did it have to be that way? I don't know.
Yeah, you wish it wasn't.
Yeah.
You always wish it wasn't, but as they say, what doesn't kill you makes you stronger. And fundamentally, I believe that very much so, from life's journeys, that these things, so long as you learn from them, are
100%.
wonderful, wonderful teachers. If you don't learn from these things, you keep making the same mistakes. You sort of go, well, wait on, you need to sort of pull up a little bit here and understand what you're doing.
No, you do need to learn. Otherwise, you're just going to keep repeating it. But it's funnily enough, my stepdad last year, poor thing. Well, this part wasn't funny. He got hit by a car. He was cycling. And I ended up looking after him for about 3 months. He lived with us for about 3 months. And he said, you know what, Vicky? He goes, you're like Rocky. Doesn't matter how many times you get knocked down, you get back up again. I was like, thanks, Johnny.
But it is the thing, it's easy to get knocked down and stay there.
Yeah.
It's really hard to get back up and to deal with whatever it is that's happened that you need to deal with, and then to be able to strong enough to keep pushing forward. And in your case, you've pushed forward in a major, major way. A lot of people pushing forward be, finding a way to get back into the workforce, not to start their own business and then to hammer it. So again, very, very well done. And it shows the style and strength of character that you are as a person. So that's excellent. Let's let's talk about, briefly talk to me about what you're doing today in your business. And I've got a whole series of questions here that have come out. And for everybody listening, they have the ability, if they want, is to send in some live questions to me. We may or may not be able to get to all of them, but send them through, and the girls behind the scene will get them to me, and we can talk about those as well. But Vic, tell us more about what it is you're doing today, because although these are not infomercial sort of things, infomercials, I think it's important for people to understand why you are an expert to talk about what we're about to talk about.
Well, number one, let's just talk about vision, because that's really important, as you know, to focus on and really believing, what does the FBAA look like in 5 or 10 years' time? What does Credit Fix Solutions, what does my broking business look like in 5 or 10 years' time? And I recently sat down, it was just last week actually, in business coaching, and had to think about the vision. And so far it was, to offer no result, no fee credit repair for brokers and consumers across Australia. Well, okay. And again, like you just said, it's like an infomercial. You got to peel it back and go, no, really, what is the vision? And I came up with a couple of lines, and one of them was to provide a safe place for brokers and for consumers to come to get trusted and honest credit reporting education, and also advice and help. And that could be in the form of DIY credit repair. That could be in the form of how do you protect or improve your credit scores yourselves. So we are education first and money second, which my husband tells me is like ridiculous, because everyone else is like money first. But that's basically what we're all about.
Yeah. I guess if your health, both mentally and physically, aren't right, it's hard to achieve the financial results, because you can't focus on it, on what you need to achieve. Okay, well, that's excellent. Let's deal with some of the questions that we've got here, and especially in the current environment where we've been seeing for 13 months or whatever it's been now, with interest rates continually going up, and the lack of what I believe is fortitude by the Reserve Bank to actually stop and pause up until recently, to actually look at what the human data was actually saying. And I've spoken on radio and TV around the country.
I love Saturday morning with you on Channel 7, and I'm like, got my coffee, and I'm like, hi. So cool.
Yes, sorry about that.
No, great.
But it's been around this, need that, when we're looking at these interest rate movements, that it's reflective of economic data that is historic at the time it's looked at. So it's not like it's in the last 3 weeks or the end of the month that just passed. It's back a bit. Excuse me. And that, although it showed one thing, it didn't actually show the human impact of what those past decisions were having. So people constantly in catch up. And I imagine that's played a real toll on people's credit reports. What is it you're seeing in regards to those people who are, in the consumer land in home loans, their credit reports and scores? Is it, or has it been having an impact on that?
Oh, 100%. And I was saying way back 12 months ago, we're seeing more and more consumers affected by not necessarily a default or a court action that we usually are removing, but just missed payments on a credit card, on a personal loan, and all jumping up and down going COVID, 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 right? My interest rates are going up, blah, blah, blah. They're trying to protect the home loan. So that's fine, and all zeros and all up to date. But then credit card, 2 or 3 missed payments. And it is more and more and more. Even Experian just quoted, they're seeing more of this impact on the credit reports. And I'm like, I've been seeing this for 12 months. And it's really...
So I talk about this is the human data.
Yeah.
Right?
Yeah. I mean, we see 20 to 40 reports a day. And out of those reports, probably about 50% we don't take on. We're just giving them DIY credit repair because they've just got missed payments. And unless a bank or lender has made an error, it's the borrower's obligation under the NCCP to make sure they pay on time or organize formal hardship assistance. And that was just the response we kept getting from banks and lenders. So we're just telling brokers and their clients, look, send your pleading case up to your bank or lender. They might do it on compassionate grounds. They don't have to, but they're not able to refinance or get better rates. They're stuck on 9 or 10% with their home loans. And it's really awful having to have those conversations because we're having them 10 times a day, 20 times a day.
So on that piece about 9 or 10% home loans, you seeing much of that? The highest I heard, and this was two or so months ago, where somebody was on 785 and almost had, and rates were sort of like at the top of the 5s, early 6s. Going, geez, what happened there? But you're seeing rates a lot higher than that?
Yep, a lot higher. Yeah.
Wow.
And it's stuff I can't fix. I can't fix it.
Yeah. No, so I've petitioned the Federal Treasurer and the Federal Financial Services Minister that banks need to be transparent on their backbook pricing, so their existing borrow rate, not just the enticement of the new borrow rate. And that's been put in the hand of one of the senior senators who runs a specific committee for government that I'm catching up with, hopefully in about 2 weeks' time, to talk about that transparency piece, because that's shocking. Yeah.
Easy catch up with some cool people.
I don't know about that. But...
catching up with my best mate next week,
You're going away on holidays, you'll be right.
I am. Fiji tomorrow. Can't wait.
And you'll be with your best mate. So you win on all accounts.
100%.
But these are things that are invisible to a lot of the marketplace, and certainly invisible, I would say, to the Reserve Bank. So if I look at the Reserve Bank data, it shows there's currently around a 42 to 44% differential between backbook and front book. I went back 6 months ago, it was close to 50 basis points. If I go back even further, it was bigger than that again. And that's what I've been complaining about, is that there is this pricing difference between what the new borrower is being offered to compared to what the existing borrowers have. And that you come in as a new borrower going, hey, I got a really good deal, and all of a sudden rate creep, and all of a sudden you're up here where you never expected to be, let alone at the kind of rates you're talking about, which is absolutely disgraceful. And this is where we need the brokers around Australia to be able to help borrowers to get out of that. And if they're having greater difficulties, to speak to somebody such as yourself to see whether or not there's other things that need to be considered along the way.
Because it's an educational piece. Consumers aren't aware. They don't understand the impact that making 5 buy now, pay later inquiries is having. Those of you out there listening who've heard me speak before, you know how passionate I am about this piece. But yeah, being educational, being proactive rather than reactive with clients when it comes to their credit reports. And that also creates a really warm and fuzzy point with your clients, right? So, and then it creates a sticky client off the back of that. And then you look like a superhero. But does the broker have the time for that? That's my question. So that's why we've put so much material together for our brokers, and they use that so they can educate, which is awesome. So grateful for all the shares. So brokers can move on and do the other million zillion things that they're supposed to be doing.
Yeah, it's amazing. So,
and I play in a bigger space, just FYI, but you know, I don't have the money, so if anybody wants to sponsor me, they can. But but I do have a vision for Credit Fix Solutions to have some sort of educational like hub where everyone can come to, low income earners, maybe people who don't have access to too much education. So that's something I'm very excited. We've just started working on with a professor at a university, but that's all I'm going to say. So,
okay. Well, when you're ready, you come and talk to me.
Done.
I'm all up for the education piece. You know that?
100%.
Very good. All right. So next question is, I've got here, brokers who are excelling are creating meaningful conversation at every touch point with their clients. What does this look like, especially when it comes to the credit reporting side of things? Because obviously you are very, very much across the whole credit reporting thing, because that's your gig.
I do.
So what does that look like?
It's like we just said, actually being proactive. We've got to stop being transactional. So those brokers who, you know, come and listen to us talking and come to PD days, you know, all the rest of it, they hear all of this. But I believe there's a certain percentage that are still very much like, oh, well, I'll just do this transaction now. So what does meaningful look like when it comes to credit reporting is helping your customers by letting them protect or improve their credit reports and scores moving forward. Because if you're like this and you're like, you know, those horse blind blinkers on, whatever they're called, 9 to 12 months time, your client's going to want another loan, or maybe they are, for example, doing a construction loan off the plan, and you haven't given them the education when it comes to how to improve and protect their credit reports and scores. It's very likely that in a year's time, they're going to have missed payments, or they're going to have too many low grade inquiries because they simply didn't know. So it's a very short, meaningful conversation. You know, you don't need to put too much effort into it. It's just a little bit of, oh, did you know, by the way, just be mindful, you know, how many times you inquire between now and when we settle.
So that plays into that education style conversation, doesn't it? That brokers should be having with clients. I imagine that's pretty broad what they should be doing, but they need to be able to, I guess, educate their clients as to what goes, what doesn't go. Would that be fair? Is it hard to educate borrowers on this?
No, it's really not hard, but I do an hour webinar or in-person gigs, as you know, around the country. And within an hour, I can get that broker up to date on what they need to know. So it's really, and then, you know, obviously we get a CPD point too, which is awesome. Thank you. But also with our brokers who maybe don't come along to things or maybe get busy, we are happy to do that education with their clients. So they can tick and flick, send it to us as their support service provider, and just move on.
Okay. Well, that's helpful, because I guess in a broker's life, they're busy as just trying to get through inquiries and get through scenarios and get through lenders to actually get them an answer.
So, and that's what I set this up for, as brokers support service provider. So, you know, and I'd rather that you know, it doesn't make me any money, but I'd rather they come to us and they get educated than God knows where they land and they lose money for something that potentially couldn't be fixed anyway.
Oh, that's interesting. So what are the kinds of things that can be fixed? And I guess probably better, what are the things that can't be fixed? Because there was a misconception of what credit repair was all about in the bygone days. I kind of think that's gone, but I think it's helpful that brokers I've been working with the regulators on that too. But what is it that, I guess, initially, let's deal with what can't be fixed. There are some things that just aren't going to resolve. So it's important that brokers don't lead a borrower on a journey that is never going to work. So what are those things that can't be fixed?
What can't be fixed? Bankruptcies. They're on for 5 years, and that includes a Part 9. Even if they paid out at Part 9 earlier, it's on the credit report for 5 years. So bankruptcy has to remain. There's a little asterisk. There's a thing called an annulment, but that's very 90s. So a lot of the, the 90s brokers are like, oh, I'll just do an annulment. No, because there's one credit reporting agency that don't remove a bankruptcy with an annulment. And so therefore, if lenders are now, which most of them are, checking all 3 credit reporting agencies, they're going to see it. So there's no 90s hacks anymore.
Sure. So to be clear on that, bankruptcy isn't for 9 years, but it stays, for 5 years, but it's for 3 years, but it stays on your credit report for 5. Is that right?
5 years, from the date of entry. With a Part 10 with a full bankruptcy, if the discharge occurs after year 3, so say I go into bankruptcy this year, what are we, 2023, and I don't discharge until 2027, that's 4 years. So then the legislation states it's 2 years after that. So it's whichever is the longer. It's 5 years or 2 years after discharge, whichever is later.
Well done. Glad you know that.
It's a headache. So bankruptcy is one. The other one is which we get asked all the time. So I love.
Before you go, what's the difference between bankruptcy and Part 9?
Same thing. Part 9, Part 10. So a debt agreement, which these poor things, they come to us. They're like, oh, I didn't know it was a bankruptcy. They told me it was a payment plan. Anyway, we're getting into that for the regulation of the debt management space. So that's good. Hopefully, ASIC just revs up the engines and gets rid of these people.
So it's basically the same thing.
It's the same thing. It's just a paid. You just pay it out.
Okay. All right. Right. So what was the next one? That was
next one is all of the ASIC notifications. So we can't get rid of that. So if you've got SME clients and they think, oh, I'll just go and liquidate that and then I'll start again over here and then that's fine because I'll earn money here. I'll be able to get my finance. No, that's very 90s. It sits on the credit report. We can't do it. Any of these happen.
Everything seems very 90s. The 90s must have been a great era.
It was dodgy. I was in Parramatta, Western Sydney. It was dodgy as in the 2000s. Anyway, it's 20 years since then. We have to move on. So ASIC notifications can't be removed. Now, everything that your clients do directorship-wise with PTI LTDs just follows them around for the rest of their lives. So they should be very mindful of, I'll just liquidate that and that's fine. And then I can go back and get finance.
It's very different in America where they can basically bankrupt the company and not bankrupt themselves and it doesn't leave a blemish. Or
oh, really?
America is sort of like, the man with the initial that starts that way has done it goodness knows how many times. But you do it here, you might get away with it a couple of times and ASIC says, you're no longer fit. Everything you touch collapses. So,
big oopsie when they think that that's a strategy. And the other thing that you can't fix is if somebody's created basically got another name. So I don't know, Peter White becomes Paul Smith, it doesn't create a new file anymore. It merges you and you will still be forever and a day linked to Peter White. So there's no changing your name if you've got bad credit.
Peter White to Paul Smith hasn't taken me on a journey. Peter White's very common. And you've given me another common name. At least give me something creative.
Where do we want to go? Like, we'll go to, I don't know, Diaz Ronaldo.
There you go. I can hide behind that. No. So that plays in, if I've got it right, into the phoenixing laws, where people sort of swap names around, do a whole lot of bad there, try and change the names or flick it over here, and then mitigate or try and mitigate what happened over there by turning a back on it. So, that's not me on this.
100%. We can't. Again, that was, let's just stop saying 90s because it makes it sound even older. That was 2000s, so not the 2020s. What else can't be?
You'll make me feel older if you're talking about the 70s and 80s.
I know. I've got to stop saying 90s. I'm making myself feel old.
That's right. That's okay. We get it.
You're
making me feel better.
I know. I fixed someone's credit report and their year of birth was 2020. That made me feel old.
I would have thought they were still in Kimbies. That expression probably
2000. The date of birth was 2000.
The world's a bit scary.
No, it's
Um,
look, thank God for all the years we've been given on the planet, and look at all the difference you've, been able to make. And, I'm very grateful for all the time, gobbling I've got too. So, but anyway, moving on to what we can't fix, inquiries. So this is all behavioral. This next section is behavior. So this is where
this still what you cannot fix or what you can fix? Because I want to do can fix, cannot. Okay. Yep. Tell me more about cannot. Yep.
And this is the main pain point that everybody listening should be educating their clients on. Yep. You can't just go around removing inquiries because your customer didn't understand that doing 10 inquiries over a weekend across a few glasses of wine was a good thing to do. We can't remove this. You can only remove data that is incorrect.
Yep.
We cannot go around mucking around with data. So they have to stay. What fixes that? Well, time.
Yep.
They just need to stop inquiring. And
when do they fall off? How long does it take before inquiries fall off? 5 years.
5 years for inquiries. Yeah.
Yeah.
The ASIC history goes back years and years. It depends on the bank or lender, right? They're checking all your old directorships, or they're just checking the most recent. That will just depend on the lender themselves and their credit criteria. And then missed payments. So it's really, really crucial that borrowers understand the need to approach a lender and organize the formal assistance package properly. You can't just pick up the phone and say, I need help. Doesn't work like that. You need to fill in the paperwork, and you need to do it quickly. Because when they say, yep, okay, we'll accept that, but please fill in this paperwork, they'll only wait a month, and then they'll start issuing default warning notices.
Yeah.
So,
and then it goes on a nasty journey from there.
Yeah. So that's pretty much, I think I've covered everything. That's what can't be fixed.
Well, okay, let's deal with the other side of the ledger. What can be fixed?
Anything that is incorrect.
Okay.
So
anything incorrect.
Yeah. So if you're a victim of fraud and you've got a whole heap of crap across your client's report, it's not theirs. Now, obviously, a consumer can go.
I was going to say, because you can't fix fraud. Fraud is fraud.
No, but you can fix all the crap that's on the report because of being a victim of fraud. So all your client needs is a statement of claim. Statement of claim. That's to list a judgment against someone. Anyway, what do you call it?
I need a list. They need a list. They need a list of what's gone wrong.
No. They need like a legal document, stat dec. That's what I was going for. Stat dec, not statement of claim. That's what I do when someone doesn't pay me for my work. Statement of claim.
Hey, that doesn't happen too often.
My default rate is probably higher than most lenders that do personal loans. I'm dealing with people with bad credit, so it's expected. So
we won't dwell on that.
Hey,
we won't dwell on that.
No, we won't. Move on. We do great work. It's awesome. So stat dec, and they need to report the cyber crime government website, whatever. Then they need to take those documents to each credit provider and say, hey, listen, I've been a victim of fraud. You need to remove that data. You can't just go to Equifax and do a corrections. It has to come from the lender. They have to go through their books and they have to go, yep, no, that wasn't you. We'll verify all of that. It takes about 4 to 8 weeks. It's a painful journey. We're happy to do that. We're going to charge a fee for our time, obviously, to run the case. But that, and
business
should be fixed because it's fraud. Defaults. So a default is where your client doesn't pay Vodafone, for example. And it gets into serious arrears, and Vodafone has no choice but to list a default against your client. That remains on the file, and that's consumer. That remains on the file for 5 years.
With telcos, I know going back a bit, I was going to say the old days, but we're not talking about the 90s or the 80s, but back in the day, it always used to be that telcos seem to list a default or list you on their credit reporting for almost anything, and a lot of it was never the person's fault, or they'd already paid out a final account. Yet all of a sudden they wind up with a listing on their file. Is that still kind of thing still happen, or is it a lot better these days? Because telcos used to be the worst in utilities.
Yeah, it's a lot better than what it was. Lenders and credit providers back in the day, like 12 years ago when I started, 10 years ago, were listing a bunch of clear outs, which is where it's listed for 7 years, because they were just like, oh, whatever, we never heard from you, clear out. And then with the changes of legislation and re-regulation, all the rest of it, it has become a lot better. So very rarely do we see clear out anymore. Unless the credit provider believes it's been taken out fraudulently.
Yeah.
So that's been good, but
Yeah.
are there still mistakes? Well, yes. I mean, we're only taking on people where we believe that there are errors, because otherwise I don't get paid. Makes no friggin' sense. And I'm not a charity. So I'd have to fire everyone. So I'm like, I can't go around saying yes. If you want yes, go to a firm that charges upfront, because they're going to say yes to everything. We say no because there's nothing payable until we get a result. So I'm very strict on what we take on. But out of what we take on, our success rate is anywhere from 80% and up. And that's from reporting that Rochelle, my team leader, carries out with me because I need it to be above that to be able to keep the business afloat. So yes, there are errors. There's also, you can apply some extenuating circumstances with consumer defaults, but not commercial. Commercial defaults are a bit harder to remove because there's less legislation that we have.
Yeah, that becomes tricky because you wind up in the land of the courts then, and you don't have any regulatory protection, if I can put it that way. It becomes a lot harder. And then you have a dispute at a small claims tribunal or something like that, and that's just a pain in the neck.
Yeah, like if you've got SME clients and they've got things like Caltex defaults, we wouldn't even take it on. You just need to go and look at your other lender options.
Well, I think it's a great approach because, it shows it's not, and don't take this the wrong way, but for the sake of it, I'm trying to grab another term out of my head, but it's not coming to me. Well, predatory, it's not just about the money. It's not a money grab, right? And that's an important thing to understand. There's a genuine interest of being able to help someone and taking on something that there is an opportunity to do. And you also mentioned too, a bit earlier, you're talking about DIY. Is that where you're just basically giving them, say, look, this is what you need to do because it's not worth your time as such for you to get involved, that kind of thing?
Do it yourself. Yeah, no, especially with missed payment cases, because I tried, it's bloody trying anyway, and it was just costing me money.
I wasn't going to say that. I love you dearly. I wouldn't say you tried.
Anyway, but so I had to hire and pay wages for another admin support person just to run repayment history information cases. And then after about 100 or 200 of them, I was like, no, this isn't working. But even if I had a very sad story, like people whose partners have passed away and cancer and domestic violence, bringing those cases to the bank. So I thought, like, maybe, because sometimes it can apply to a default if sufficient financial hardship wasn't offered at the time. But I just kept getting these automated responses from banks and lenders, like, under the NCCP, it's a borrower's obligation. And so I thought, well, stuff you, I'm going to tell the consumer how to write a complaint themselves and to some success. So they are doing it. So consumer facing. So we've got a great little strategy that they can use. They have to apply it. And look, some of them are a bit lazy and they go, oh, no, I tried calling them and they wouldn't do anything. No, do not call. You need to submit the complaint formally, right? But by giving that, we've saved a few credit files, which is awesome.
Yeah, excellent. So is there anything else that can be fixed?
Court actions. So
court actions.
Through my law firm. So I have a law firm now.
Oh, really? Well, you didn't talk to me about it. You got a law firm.
I have a law firm. Yeah, I'm not a lawyer. I have a lawyer as director on the law firm. So Credit Fix Lawyers since 2019. GoDev's our lawyer. And we can help. We can remove court actions. Off company.
You see many of those
reports? Pardon?
You see many of them?
Oh, yeah. It probably accounts for about 20% of our workload, though. It's mainly defaults.
Yeah. Okay. Very interesting. All right. So talk to me about this piece around, the next question I've got here is around, what is it the brokers need to be telling their clients? So, we spoke a bit about not being transactional about it, but what do brokers really need to be telling their clients when they're looking at these things?
They just need to be sharing education with their clients, basically, is the sum of it all. I've got the Credit Reporting Essentials Guide if anybody wants it. That's fine. My brokers use it all the time, and the ones who use it are like, oh my God, this is great. Because I just flick this out to my customer, whether it's SME or PAYG, doesn't matter. It's got, where they get their credit reports from, how to read them. Because that's a big thing. I know how to read it, but I remember when I started 12 years ago, I was like, what the
hell is that?
How to read, what is that? And it's so much more complicated now. Like when I started, there was just the old Vita report. And then I think Dun & Bradstreet became Ilion and you had the two.
Yeah.
But now you've got Equifax because they bought Vida, Ilion,
Right.
Experian, and now Creditor Watch, which is just company files. So you throw all that at a broker and they're like, and even a consumer.
So what's Creditor Watch? That's company files only, is it?
Just company files only. Yeah.
Okay. All right.
Yeah, they're very good at reporting, and they're pulling in ATO data. They're pulling in everything. Your SME clients can get a free report from them too, which is great.
Yeah.
Because otherwise we have to pay for company files with Equifax and Ilion. So Creditor Watch is a great place to send your clients to. But you can imagine I can sit in front of a group of brokers and tell them over 2 hours everything that they need to be saying. And the broker's like, I don't have time to have this conversation. So sharing that credit reporting essentials guide, my brokers love it. It tells them how to get the reports, how to read them, how to protect and improve them. And it's got a little checklist and it goes tick, come back and see my broker to discuss further.
Okay.
Done.
Excellent. So just I'm curious about this Creditor Watch. So is Creditor Watch basically the same as or a parallel to Equifax?
Yes.
Okay. And Ilion, if I've got that right, that's a US company base, isn't it? That's come out to here.
Well, what's Dun & Bradstreet? Did Ilion buy
Bradstreet's UK, or?
I can't remember. I know that Equifax bought Vida.
Equifax
is definitely American. Experian is UK.
Yeah.
I thought Ilion was the Aussie one. I thought it was just Dun & Bradstreet changed their name.
Hey, could well be. I was just trying to get in my head. Geez, a lot of them these days. I used to just deal with the one, which is principally today Equifax.
Yeah.
Well, they're all into it. Well, hopefully competition keeps the bastards honest a little bit, because when there wasn't so much, it was a little bit painful and you were hamstrung to those who had the power.
Yeah, but then it creates this whole data jungle before you can even look at who your bloody lender options are. I mean,
so who's the primary one? Is it Equifax? Are they the primary one for consumer reporting?
Equifax is the longest standing credit reporting agency in Australia. And I believe that most lenders, including the majors, are definitely all checking with Equifax. But ANZ Bank, for example, now check, as far as I'm aware anyway, still are. We were confirmed that they check Equifax, Ilion, and Experian.
Okay.
So chat to your lender BDM.
So it's no wonder brokers say, I've got time for this. It's doing my head in. That's why you do what you do. That's why I look at it. And it's a very valid point in my mind, is that you can't be all things to all people. So you're better off where you can is to engage a specialist. A lot of people come to us and say, is the FBAA going to be an RTO? And I go, why would it be an RTO for? I've got training companies that do that. That's not our area of specialty. So you can't you got to put these out to the right people to make sure that they come out the right way. Interesting. SME clients, what are some tips for SME clients? How do they protect their company reports? Because we've spoken a lot about consumer. Let's flip it on to the company side, because we spoke a little bit about phoenixing and what that looks like, but what is it that they should do to protect their reports and their scores, credit scores?
Yeah, a couple of basic tips for SME clients would be make sure they pay invoices on time. So some of the biggest suppliers are reporting to Equifax whether they pay in term. So if you've got 7-day invoices, or your client does, and you're paying them at day 30, if that's one of the suppliers who report that to Equifax, because I believe it's only the bigger ones, the Caltexes and maybe Kennards Hire. Those sort of SME clients, maybe they're running delivery businesses or construction building. They most likely will have reported information from suppliers. So making sure that they're checking invoices and paying on time. It can't be fixed if you're paying late and you've been reported as trading late, and it will lower the company credit score and it will increase the risk. So when the credit assessor is looking at that, they'll be like, now you got like a 70% risk of not paying us. Or not paying us on time. Sorry, you can't have that truck loan, right? So that's being reported. So making sure companies and businesses are paying on time is vital to protect the credit report and score. And also another one is to have a chat to suppliers about doing hard hits on company files and the directors' files. So what we're seeing, for example, you're dealing with a company who, I don't know, is going to give you glass and it's going to be on an account and you go back to them every 2 months and you need more glass. They can go into Equifax because they're probably, lending whatever credit provider, supplier they've signed up. They'll go in and check on you, which they can if it's part and parcel of that particular contract. Go in and put a hard hit on the company, but also on the director as guarantor, if that is that particular contract. And every time those inquiries are put on, we lose points, because the credit reporting agencies go, oh no, another inquiry, 20 points. Oh no, now you've done the same inquiry 3 times in 6 months, we'll pull you down another 100 points. So having a chat to the suppliers and saying, look, can you just do a soft touch access in the back of my file rather than doing a hard hit? Because I'm going to be coming back to you every 4 weeks. And if we do this for 6 months, my score is going to be minus 200.
Yeah. So that means a hard hit leaves a footprint, a soft hit doesn't. Yeah. So it doesn't impact the credit score.
Yep. So soft access, very, very important. And then, the importance of paying on time. That's pretty much it for companies. If they have a dispute as well with a supplier, just being mindful that the supplier doesn't have to issue default warning notices. So it's not in the consumer world. We have to have a section 6Q and a section 21D default warning notice. With commercial debts, you're 1 day late, they can whack a default on.
Nice. All right. Yeah. So you've spoken a bit about the education pieces that you have for brokers and how you can help them along. Do you have anything that's there that's actually for the brokers to use for their clients?
Yes, we do. We have.
Yeah. What's that?
I've got recorded webinars that they can use. We've got the ebook on credit reporting. I've done sessions with coaching groups who are all business owners, as well as a Chamber of Commerce But look, I mean, it's all about how can I make this bigger, but I haven't got any money. So until we can do that, I mean, look, we're going to chuck an educational webinar up on our YouTube channel, for example, soon, that you can just kind of click through and watch. I mean, I'm not doing Google ads or anything like that. The problem is that most consumers, if they don't have a broker who knows us, they're very scared and they're desperate, and it's, they'll just pick up the phone to whoever they find online.
But not necessarily a good way to go about it.
No.
Right. So although we'll send out a link to everyone, how do they best get in touch with you?
Flick us an email. You can email me, Victoria, at creditfixsolutions.com.au, or I'm going to Fiji tomorrow, so maybe sales@creditfixsolutions.com.au. That's where we all sit. So there's 3 or 4 of us doing scenarios at any one time. So you'll either get hold of Cookie or Mary or, me sometimes. The email's probably best.
Yeah, all right. And the other way to get in touch with you could well be you coming along to our conference.
Yes,
so I am. FBAA National Conference, Friday the 3rd of November. There's my plug. Come and see Vic at the conference. And
I'm going to be there with my team. So I'll be there with Zarko and with Mary.
Oh, really?
Those of you who know Zarko and Mary. Yeah.
Yeah. Fantastic. Well, we very much look forward to that.
Oh, I mean, I've booked everything.
Yeah. Oh, you're a jam. It'll be Zarko's first FBAA conference. That'll be interesting.
How cool is that? Yeah.
How the world changes. We've got to love it. We've got to love it. 100%. So, Vic, have you got any last tips? We're getting close to the end of time, but have you got any last tips or tricks or words of wisdom, pearls of wisdom from ladies such as yourself, that brokers need to really absorb and take note of, versus just being cavalier about things when it comes to credit fixing or credit solutions?
Yeah, just for brokers, I mean, you're playing a critical role in a family's financial well-being journey, right? And for small business owners like me, and it's very, very much appreciated. We do have AI coming in. I've been looking at some interesting things for my business with AI. But what is going to be key for successful brokers is creating that connection as well as they possibly can at every single point of the journey, because AI will never be able to do that. So learning as business owners, and service providers, we all in the same game. How do we connect honestly and lovingly and genuinely, right? That would be
good. Thank you for that. That's a good piece of advice. It is interesting that it's that genuine connection that makes a difference. If you're going to be too clinical or transactional about it, people tend to see through that very, very easily. So you be genuine what you're doing. I've got a last-minute questions just come through. That's very close to the wire. So I've got here, what affects the percentage chance of adverse recorded in the last 12 months shown on Equifax CCR? Hopefully that makes sense to you.
No.
What affects the percentage?
Read it again. I'll see if I can work it out.
What affects the percentage chance? I guess that's meant to mean of removing an adverse report.
It just depends on whether you find an error or not. So how we run our cases with defaults is we go to the credit provider and we request copy of communication history notes, contract, default warning notices. We collect the client's story up front. Assessing the client up front to gauge, do we have grounds? Because we need to, as per our license with ASIC, only take cases where we believe we have grounds. So with all of that, then the success rate, if there's a legal error, they have to remove it because it's not supposed to be there.
Okay. So
it's 100% if it's illegal or inaccurate data, because it shouldn't be there. Okay.
I've got another last minute question too. We'll go about the last minute. That's all right. Is Ilion I think we've done this. Is Ilion the Australian-based version? By the looks of it, DNB is USA. Oh, okay. So they're just clarifying what we were talking about before. Thank you for that.
Oh, yeah, no, thanks for clarifying that. Okay, so they're, all right. So now we've got 2 US and 1 UK.
Yeah. It's always something, isn't it?
Yeah. Like you said, everything changes.
Oh, it does. It does. But behind that, everything's still the same. Even though these companies move around and regulatory environments change and so on, it's still fundamentally the same. It's just the latest twist on it that you got to be across somewhere, I think. Always seems to be. Anyhow, Victoria Costa, founder and CEO of Credit Fix Solutions, thank you so much for joining me today. It's been an absolute pleasure. It's always wonderful to catch up and have a chat with you. And I love the merch in the background too. Well done. Look, there's a trophy and a hat, and there's a certificate up there, I see. Good on you.
There's a whole wall of certificates.
Is there?
Yeah.
I can see the FBAA one. That's what's important to me.
100%. That's my favorite trophy right there. Yeah. Thank you.
Very good. Very good. All right. You take care. Thank you so much for joining us. Really appreciate it. Everyone, please thank Vic and come and see her at conference this year.
See everyone. Thanks,
Vic. Take care. Speak to you soon. Enjoy the holiday.
First time in 9 years. I'm going to not look at emails.
All right. Do that. You enjoy it. Switch them off.
See ya.
All right. Take care. All the best.
Bye.
All right, everybody. Thank you for joining us and being a part of Q&A with Whitey today. Keep an eye out on the registration for next month. Next webinar is on the 21st September. And again, thank you to all of our supporters and sponsors that have been with us for so long. Helps us to create all this content and make sure we bring it to you free. So once again, thanks AAMC, Affordable Staff, ALI, Heartland, Amfin, Finstro, Early Pay, Credit Fix, that was who you just heard from, Insurance Advisor Net, Notify, OnDeck, OptiPay, Trailbook Loans, Strive Financial Prosper, and Pepper Money. Thank you all for being a part of us. And of course, folks, you'll get an email from us after we finish today. It'll have your CPD code for 1 hour, and you'll be able to watch this again on our YouTube channel. But for now, thanks for joining us. Be well, be safe, and we'll look forward to chatting to you again very soon. Take care. See you later.